Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about a company that has been giving 20 years dividend streak. It is considered 43% undervalued. Hedge fund holdings have increased, as well as it is 36% upside. Based on the analysis. So we're going to take a look at these. I'm going to show you many different sources so you can kind of get an idea whether this is a stock for you to possibly invest on. As always, please remember this is not financial advice. This is just me sharing. If you are new to the channel, hope you like this content. Subscribe, hit that notification bell. With that said, let's take a look at this company. So the company I'm talking about is International Flavors and Fragrances. The ticker symbol is IFF. Basically, this is a company that manufactures food, beverages, health, and bioscience, scents, and pharma solutions. So the company has like 3 segments. You got nourishment, health, and bioscience. So if you go to their website, you can see a little bit more. So you can see what they do. You got naturals, you got cosmetics, you got like taste and powder. So if you click on the cosmetics, you can see they do like these ingredients for personal care. If you go click on the taste, you can see they also do all these spices and flavors. And then the other one is going here. You got the more of the other ones. So again, definitely if you're interested in this company, take a good look at it, look at what they do. Let's go swing to Seeking Alpha. And so what I'm looking at is the 10-year performance of this company. So it's about 69%. But if you click on the max one, you can see it's about 201%. So it's been stagnant. You can see from here. And then from, I would say from about 2011 maybe, 2012 right there, it kind of started going up, and then it has a little dip right here, and then it just went up, and now it's on the downward one. So now if we swing to Yahoo Finance, you can see a little bit more information. PE ratio is about 40. 52-week range, the high is 155, the low is 101. At the time of this video is 102. You can see from here, outlook is bearish. And then if you look down here, you can see from the 1-year chart, it's going pretty much down. So again, if you look at the 5-year one, it had its up and then now it's starting to come down. Looking down to some of the earnings, you can see beats for the past 4 quarters. But look at this, interesting right here for the financials. You can see from 2020, you can see the revenue of $5 billion and then the earnings of 363. But if you look at 2021, look at that huge amount of growth, 11 billion revenue and 270 earnings. Now swinging along down to the recommended trends, you can see a mixture of holds, buy, and strong buy. And then they have a recommend rating between a buy and a hold. At the time of this video, it's at 102, so it's way down to the low side. The average is 107. Now we continue looking at Yahoo Finance. There was an article on August 30. Pricing demands up, international flavors despite woes. So basically, it's just talking about the company, how IFF continues to invest in organic investments and strategic acquisition. It's pretty interesting article, so you definitely want to take a look at it. But what I like about this one too, they talked about how the acquisitions of other companies and the mergers. So if you look over here, International Flavor merged with DuPont and D and businesses. So now they're the whole leading positions in the core categories of nutrition, cultures, enzymes, soy proteins, flavors, and fragrances. So definitely check this out, read about it. Pretty interesting article by Zach Equity Research. Now, if we look at, again, Yahoo Finance, I wanted to see a comparison of how the performance based on the S&P 500. You can see the blue one is the S&P 500, and then this one is the international fragrance. So you can see way trailing the S&P 500 for the past 5 years. If you swing by to maybe the year, you can see pretty much almost the same thing. Now let's swing to NASDAQ based on their analysis. They're rated as a buy. There's about 13 of them. And then these are the companies: Citibank, you got Wells Fargo, JP Morgan, and all those other guys. Yeah. Now let's quickly look at Webull based on their analysis. About 21 analysis. They're rated as a buy. And then you got your 90% strong buy, 42% a buy, and then a hold of 33%. Looking down to the price tag, the high would be 178, 141 is the average, and then 105 is the low. So pretty much if you decide on getting this, you're getting it on the low price based on the price targets right now. Now let's quickly look at Simply Safe Dividend. Based on their dividend safety score, they're rated as safe, which is 62. The dividend yield is 3.16. Market cap is a large cap of 26 billion. Now, if we look down to the key metrics, you can see recession they maintain. Payout ratio is about 54. If you look at the dividend growth, the last 20 years, 9%. The last 5 years, 5%. And then you can see uninterrupted dividend streak, 20 years without a reduction. You got 19 consecutive years of increases, and then you can see pretty solid one. I would like for it to go higher, go in the upward trend, but it's kind of slowly chugging along. Yeah. Payout details: you can pay quarterly in the months of January, April, July, and October. Your annual payout will be 3.24 per share, which you break it down if over here is to see from like 81 cents, 79, 79, 79. So looking down to some of the PE ratios, you can see 17%. For the materials sector, it's about 13. Now, if we look down to investment, return on investment capital, you can see the return on equity as well. So you can see it was high from 2012 to 2017, and then it kind of faltered down. So if you look at it, it looked like it's starting to get back up. So we'll see how that goes. Now take a look at TipRanks, and then you can see the price target is about 140 with 36% upside. And then you got your 12-month forecast in the high of 161, average of 140, and then the low of 105. Analysis rating it as a moderate buy based on 13. You got 9 buy, 3 hold, and 1 sell. And then if you look down over here, you can see some of the analysis forecast right here. You got guys that are like 43%, 45%, and you got 41% hold in there. Looking at the stock analysis, you can see outperform number 10. You got increased holdings, hedge funds. You got all these positive one, moderate buy. Now let's swing to Simply Wall Street based on their share price and fair value. Their fair value rated as 179. Currently it's at 102 at the time of this video. And then based on their estimate using the discount cash flow model, it's about 43% undervalued. Now, if we look at some of the positives and negatives about this company, trading below 43%, earnings grew about 366% over the past years. And then you got your debt is not well covered by operation cash flow. Dividend is not well covered by earnings or cash flow. So that's something to kind of consider. Now, lastly, let's look at Robinhood. At the time of this video, for the week, it's down 12%. For the month, 16%. 3 months, it's up. It's down -5%. And then for the year, it's down -27%. And then for past 5 years is negative 28. And then if you look down over here, based on their rating, you got a buy of 63%, a hold of 31, and then you got your sell of 4%. Yeah. And then you got C right here. November 7 is the earnings. We'll see how that goes. All right. For me, it's a pretty okay company, but I think for me, I would pass on this one. I just think that there's other companies to invest on based on my portfolio. I don't see a place in my portfolio for this one, but pretty okay company in my opinion, but just not for me. All right guys, thank you so much for watching. Hope you like this video. Give it a thumbs up, and then if you're also interested in other videos, check it out. There's other videos that I also posted as well, and if you have any videos that you want, companies that you want me to take a look at, just put it in the comments. All right guys, thank you so much. Stay cool, keep investing, and I'll catch you guys in the next video. Right, take care. Aloha.